I'm Dr. B, and yes, I'm a real ER doctor. So you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Hi, I'm Dr. B here at Verified Investing. I'm having a little difficulty with my camera today, so I'll have the IT team work that out for next week. But just wanted to show you here what I'm seeing in the S&P. Rising wedges are something that I keep a very close eye on. They tend to break to the downside, just like falling wedges tend to break to the upside. Okay, and you can see that here. This is a falling wedge in the S&P 500. And that's a nice breakout to the upside. So, in that line of thought, right, I'm looking at Bitcoin, right? And so there's a huge rising wedge on Bitcoin. And we know that in general, rising wedges break to the downside. Additionally, there's a rising channel here. Rising channels generally break to the downside. The way to think about it is anytime you have something that's rising, it tends to break down. Anytime you have something that's falling, it tends to break up. So in this case, this is a bearish formation here for Bitcoin. This is a possible bullish formation in the sense that it's just consolidating here at the same price and really not moving anywhere. This was the dump here during the tariff situation. But if Bitcoin falls, we could see a situation where Bitcoin breaks this trend line and comes down here back to 60, 50, even 30,000 on Bitcoin. The interesting thing that I'm seeing here on the crypto market is the fact that the altcoins is divergent from Bitcoin, right? So Bitcoin's close to all-time highs here, whereas many of the altcoins, right, that are well known are close to the all-time lows. All right. So Kusama down here at $14, whereas it was traded up here around $600+ DOT coming close to the initial, like the ICO on DOT around $2, so another $1.50 to go there. So what's interesting here, some of the stronger names like Cardano staying a bit stronger, but I think if Bitcoin does break down here, then we could see a sell-off in the alt. So one way to think about this is, all right, how do we capitalize on this divergence? And really, there's kind of two ways. We can say, okay, if Bitcoin starts to break down and break this trend line, we can short both Bitcoin and the altcoins. But if Bitcoin is consolidating here, we can say, all right, I like these altcoins. I'm going to start to add in a little bit here now, keep some dry powder on the side in case Bitcoin continues to fall and these alts end up down here at a couple dollars, right? So the lower you buy these coins, obviously the higher potential gain. And just to show you, this is just the law of numbers. Like if you were to buy something at $1, okay, $1.50, and go up to 120, the percentage gain is exponential. But if you're buying it here at $14 and going to 120, for example, you get about 10 times less your bang for the buck. So really, if you can keep some powder on the side in case Bitcoin rising wedge breaks down and the alts start to go down, then that is a good scenario to be in where you have dry powder on the side. The alternative way to think about this when you have a divergent market is, okay, if Bitcoin continues to go higher here and breaks out to new highs, say to 140 or 150, the altcoins should rally. So maybe you start to get a little skin in the game here so that if you get a 10, 20x rally, you at least have access to, these shares or these coins, right? So that's how I think about it. That's kind of the long and short of it here on Bitcoin and the crypto market. And I hope you enjoyed that. And I will see you again next week. Take care.